Welcome back to Stock Trader School, from Rookie to Rainmaker, and this is Market Mindset Mondays. And today, we are going to talk about what could be your silent edge as a trader. Something that if you master, it will definitely set you apart from the crowd. And this thing is simply patience, and no, patience isn't passive. It's profit waiting for precision. You might have heard the quote that comes to mind. A quote that was posted in the community, which is sometimes it is better to wait and let the market come to you than to go after it. How do we stop ourselves from becoming overly anxious, from second-guessing our decisions and exiting prematurely, especially when we're staring at small losses? He was known for his incredible ability to identify market tops and bottoms. But he didn't just jump into trade because the market looked ripe. One good trade is worth 10 rushed ones. In fact, sometimes it's not even about finding the best entry. It's about knowing when not to enter. It's about recognizing when to act and when to wait. It's like being a chess player, thinking several moves ahead, strategizing, planning, and then executing when the time is most advantageous. It's about how you wait. It's about staying sharp, keeping your eyes on the prize, and being ready to pounce when the opportunity presents itself. You know, the idea behind this is to help you avoid the trap of chasing returns. When we chase returns, we often end up making impulsive decisions that don't align with our strategy or risk appetite. Well, it starts with a simple awareness of our own thought patterns and behaviors. We need to be aware of the times when we feel the urge to chase returns and to recognize the warning signs of impatience. This awareness allows us to take a step back and to evaluate our options more objectively. Once we've identified our weaknesses, we can start to develop strategies and habits that promote patience. This could include setting specific times during the day when we allow ourselves to trade and sticking to them religiously. It could also mean setting clear rules for our trading and avoiding emotional decision-making. This can lead to unnecessary losses and can derail our long-term success as traders. It's the decision to wait, to observe, and to prepare. As traders, we're always looking for an edge, something that will give us an advantage in the market. Well, patience is an edge that many traders overlook. It's an edge that can be cultivated and honed through practice and self-awareness. So embrace patience, not as a weakness or a limitation, but as a powerful tool in your trading arsenal. Let it guide you through the complexities of the market, helping you to make sound decisions and navigate the inevitable ups and downs of trading. When you find yourself torn between two potential trade setups, it can be helpful to use this simple checklist. It's a great way to start practicing patience and mindfulness in your trading. Try using this phrase as a mantra, especially when the market is being particularly tricky or when you're feeling tempted to make a rash decision. It's a simple yet effective way to remind yourself to pause, breathe, and be patient. Have you ever found yourself in a situation where you were so focused on making quick profits that you ended up taking a trade that you shouldn't have taken? Or perhaps you held on to a losing trade for too long, hoping that it would turn around, but it never did. These are all examples of how the urge to chase returns can negatively impact our trading. Chasing returns often stems from a place of impatience. We want to see results immediately, and we're not willing to wait for the market to play out. This impatience can cloud our judgment and can cause us to make irrational decisions. Firstly, consider your strategy and your rules. Are both setups aligning with your chosen approach? If one doesn't quite fit the bill, patience may be your best bet. Secondly, assess the risk-reward ratio. Is the potential profit outweighing the potential loss? We learn to trust our analysis and our strategy, and we're willing to wait for the market to come to us. This shift in mindset can have a profound impact on our trading. It helps us to avoid the pitfalls of greed and fear, and it allows us to make rational decisions even in the face of market volatility. If not, it may be worth waiting for a more favorable setup. And thirdly, evaluate the market context. Are there any major news events or shifts in sentiment on the horizon? These can often cause unexpected price jumps, making it wise to stand pat until the waters settle. He would wait patiently for the right setup, analyzing charts, reading market sentiment, and only entering when the pieces of the puzzle aligned. There's this story about Tudor Jones and the 1987 stock market crash. Jones, who was renowned for his anticipation of major market shifts, famously exited the market on the day before the crash. Many of his peers, who were more trigger-happy and less patient, suffered massive losses. That day became known as Black Monday. And this just goes to show how being less eager and more patient can sometimes lead to better outcomes. Here's where patience transforms from a virtue into a powerful tool. Just like how a surfer waits for the perfect wave, we must learn to remain composed, to trust our analysis, and let the trade play out. So that's exactly what we're gonna unpack today. So as usual, we like to start off with the market recap. They rush their entries, they jump into trade because the market looks ripe. And then when they finally get into trade, they don't give it time to breathe. They're constantly second-guessing themselves, wondering whether they should exit or not, exiting before the trade has had a chance to play out. So as traders, we really need to master this skill of patience. Not just in terms of waiting for that perfect entry setup, but also in terms of letting our trades play out once we've entered. Now jumping into today's topic, so many traders get this wrong. There was a post circulating around Twitter recently where a trader shared a screenshot of their MT for terminal showing multiple pending orders, all triggered at different points. So you've got pending order here, pending order here, pending order there. And the question that he posed to the community was, which one of these should I enter? And this just highlights a very common issue among new traders, getting trigger happy. So you see these small movements, you see these pullbacks, you feel the urge to enter as the market presents these opportunities, and that's completely natural. After all, trading involves managing risk and capitalizing on market inefficiencies. But when does opportunity turn into greed? When does healthy risk-taking cross the line into recklessness? This is where patience becomes our guiding light, separating the impulse to trade from the calculated decision to trade. And you know, while this example was specifically about an individual who hasn't yet entered a trade, the same principle applies when we're already in a position. So let's look at some examples from the legends themselves. Take Jesse Livermore, for instance. You know, as traders, we shouldn't be fixated on the number of trades we make. Quality overrules, my friends. So as traders, we need to cultivate this habit of patience. It's not about being passive or fearful. It's about being proactive in our approach. Now here's something practical that you can start implementing immediately. And remember, patience isn't just about waiting. Think about it. But when we practice patience, we train ourselves to focus on the process rather than the outcome. Now, you might be thinking, how do I practice patience as a trader? Remember, patience is not the absence of action. It's a form of calculated action. As always, if you enjoyed this video, please hit the like button. Subscribe if you haven't already. Have a great rest of your day, and I'll see you next Monday.